Well, let's get a move on and focus on a corporate voice. Indian Hotels came out with its numbers. There's been an 83% drop in their revenues, and they have delivered a loss in the quarter gone by, which has been exceedingly challenging for the hospitality industry as a whole. Here's our conversation with Puneet Chhatwal, Managing Director and Chief Executive Officer at Indian Hotels, talking about how Q1 has been impacted due to lockdown.
The industry possibly faced the worst quarter in the last century, I would say. There has been a lockdown, not just in India, but across the globe. So a lot of our hotels have been shut down. You said 51%, but I think when we started the quarter, almost 70% of our hotels were shut down, whether they were in Cape Town, New York, London, and some of those still remain shut, like New York and Cape Town. London just opened. Within India, the capital of the country is still under lockdown, and the commercial capital only opened. That's the city of Mumbai, opened just a few weeks ago with up to 33% of your inventory to be offered for occupancy. With airports practically shut, highways shut, state borders shut, I think there was a complete lockdown of the industry, I would say, not just the lockdown of the nation, but the lockdown of the hospitality industry. And I think given those factors over the last 5 months, and especially the first quarter, we are kind of pleased that we were still able to create revenue, albeit at a very low level, 83% decline in revenue compared to the same quarter last year. So a very, very, very difficult time for the industry in the Q1 of this financial year.
Oh, yes, indeed. But it seems like when it comes to your properties, the occupancy levels have been at about 37% for the operational rooms in June, 43% for Ginger, and 21% for the higher end properties. Walk us through the outlook as to when you think we could actually see a full RevPAR recovery, because analysts are not seeing that beyond FY22. And do you think that your properties like Ginger could potentially lead the way?
Absolutely. I think no one would have ever thought 6 months ago that Ginger would be performing at north of 40% in a pandemic situation like this. And this is 40% on all available inventory. There are hotels like in Andheri, in Mumbai, in Andheri, Telikali, which is, operating at north of 80%. I think the challenge was, is, and remains the coordination between the center and the states in what is open and what is not open, how much of you are able to, of your inventory you are able to open, what are the quarantine rules, because they again vary from state to state. I think once we get some kind of a coordinated approach, it will be easier for analysts and all of us to predict. But the situation being a very difficult one for any policymaker to take a decision and stand on, we have chosen the path of looking at each hotel differently in each city and in each state. And I personally believe that as and when the lockdown is lifted, or as and when the Unlock 3.0 is fully rolled out, I think there is a great likelihood that within 6 to 8 weeks, the pent-up demand will start working, and we will maybe not get to the pre-COVID levels in terms of top line, but definitely in terms of bottom line, the industry can bounce back very quickly, because I think the industry has had an opportunity to reset its cost base.
Okay, interesting there. Now, Puneet, we have seen that your costs have been down about 51%. The fixed cost reduction has only been partly achieved. But the company has always maintained that you are looking to work on your asset monetization plans and continuing to put into place your Reset 2020 as well in these very challenging times. So what exactly is the plan in place?
Okay, I think it's good that you mentioned Reset, as we have been communicating of late on Reset instead of Aspiration 2022. Aspiration 2022, most of the objectives were already achieved when we announced the results at the end of last financial year. So Reset really stands for revenue initiatives, excellence in operations, spend optimization, excellence in asset management, and being thrift and financially prudent. And one of those pillars, besides revenue, which is very important, is effective asset management. That is negotiating and renegotiating your current agreements with all your owners, creating value for both parties and taking a longer term view, but also, as you alluded to, asset monetization. And we have done quite well in our communication in the last two financial years. We did a little around an average of 200 crores in asset monetization. I think we will now be accelerating that this financial year and at least doubling that number, if not taking it further up. And that is coming through the monetization of non-core assets. Non-core assets is pieces of land, apartments, flats, which we had bought like 30 years ago, 40 years ago, and have been carrying it, and they are not needed to be in our ownership anymore. So monetization of those, but also strategic monetization of assets will follow now, in which we will sell one or the other asset and enter into a long-term manage back or a lease back relation. We did that with one of our subsidiaries, the Oriental Hotels, for the asset in Visakhapatnam, also the one in Trivandrum. And we sold the asset in Trivandrum and entered into a management contract for a new Vivanta in Trivandrum, which is ready to open as and when the lockdown is lifted. And you will start seeing more of this, so that we come to our balanced portfolio of 50% of our assets being owned or leased and 50% on a management contract base.
Just want to get in an outlook from you as well as to when you're expecting, some sort of break even in your overall occupancy, and is there going to be some sort of a revision in rates as well as things open up?
Well, I think the thing that we need to look very carefully into is that the first half for Indian hotels and for all companies in the hospitality sector has not been the strongest half, those present on the Indian subcontinent. It's the October to March, which is the stronger period. So I think the damage that we have all witnessed in the first quarter and parts of second quarter can be mitigated in the second half of the year. The only uncertainty is our inability to understand as to why hotels are not being allowed to open when airlines are, when malls are, when standalone restaurants are. I think we are a very safe place, to stay, a safe place to dine. And most of our other initiatives, which have been launched during this last 4-5 months period, like a home delivery business with our own app called Cumin, are helping us create, ancillary revenues. But I think we need to triple or quadruple that kind of impact very quickly to compensate for the loss of revenue. So I think occupancy will not be the sole factor that will determine the break-even point. The break-even point will be determined by the total revenue per available room. And total revenue would include all the food and beverage revenues, the room service revenue, revenues coming from your club services, like we have the chambers, revenues from, all other activities, including our flight kitchen business, as and when the flights start operating. So I think it'll be a combination, a much stronger combination in the post-COVID world, and especially the post-vaccine world.
How to really look at the financial metrics now for any hospitality company, but especially for Indian hotels. Now, some experts do suggest that given that the country has been under this lockdown for quite a bit of time, there will be quite a bit of pent-up demand, as you as well alluded to. Therefore, it makes sense for hotel companies to expand. You had, in our last interaction as well, acknowledged that you are continuing to remain on track for your expansion plans despite the challenges. Do you agree with this theory, and tell us a little bit more about the capex?
Yeah, I think we have moved on from owning hotels that you were used to. So in the last 2 years, we contracted more than 50 properties, which got added to our pipeline. And we started opening a hotel a month. Because of lockdown, most of the hotels have not opened. which are either 90%, 95% complete, or even, a lot of properties which are more than 80% are finished. One of the key openings that we look forward to is the Connaught in Delhi. So the property is almost 90% renovated. And, most of the other properties that we are opening, they're all based on management contracts. Our capex has continuously gone down. I think.
Okay, that was Puneet Chhatwal of Indian Hotels on their earnings this time around and the outlook going forward, continuing to struggle there, of course, with the unlock guidelines.